Minute. Okay. Okay, so today we're going to talk a little bit more about the market updates, you know, and what are the concerns moving forward. What's happening for the whole year. Usually we do this webinar at the end of the year to do a summary and also talk about the mama stocks and how should you structure your portfolio moving forward. Okay, so but before I move on, I just want to share the usual disclaimer. Whatever I share today is not a recommendation to buy or sell, because I'm going to be sharing a lot of the mama stocks, and of course many of you have requests Nvidia. I'm going to talk about Nvidia also at the end of the and doing the Nvidia valuations. Okay, so let's talk a bit about the current market updates, right? What's the valuation of the US, the Singapore market, the Hong Kong market? Is it, what are the chances of a bull or a bear in 2026? Okay, and what's my take on all those different market at this point of time? Okay, so just do a quick refresh on what we talked about last year. So last year, the year to date performance, when I shared with you guys, if you're an Alpha Quadrant member last year, right, this was the performance back in 2024. Right, so the Hong Kong market was the best performance, right? Slightly beats the S&P 500 last year, right? The Singapore market also coming back, right? So if you notice, right, the Hong Kong market has been down for since 2022 or 2021, after the government clamped down. Only back until 2023, 2024, it start to turn positive, right? Of course, like I said, the worst markets becomes the best market moving forward. Later, I'll show you more examples. Okay, so let's move forward this year to date. What is our performance? Okay, so this year to date, right, the best performing market is actually the Hong Kong market, right? The worst market becomes the best performing market. If you remember, I said back in 2023, 2022, 2023, right, the Hong Kong market is basically, everybody talk about it as trash. Okay, so this year the US performance is a bit lag, right? Singapore markets also have gone up 20% this year, because the Singapore markets also got a lot of initiative, which I'm going to talk about it later. Okay, so let's cover what happened this year, right? So this year the S&P 500 hit all-time high. Okay, despite early on the year they already hit all-time high already, and since then until now, right, they continue to hit all-time high. Okay, but in the starting of the year they hit all-time high. When Trump came back, he created a lot of trade tensions and the resurface, right? So the market start correcting, right? But the correction is not that major, right? And as you know, Trump is very unpredictable. You don't know what he's going to do, and eventually, sort of like the trade tension just off, and then came the AI stocks that powers the market, right? So there's a few names in the S&P 500 that actually carries the market, which is the some of the Max 7s. Okay, so the question is, where do we go from now, right? Right. The answer is, actually it's very hard to predict the future. The most important thing is look at the current valuation and decide whether you should be conservative or aggressive. Do you agree with me? If you agree with me, I want you to type yes in the chat and let me know. Do you agree? Okay, if you agree with what I just said, can you type yes in the chat? Okay. Nobody can predict the future. I also cannot predict what I'm going to eat next week. You don't talk about next year, right? But the important thing is to really look at the position, the valuation, and see how can we move on from here. Okay, so right now let's look at some of the economic data that has been going on for the whole year. Okay, in 2025. Okay, so you look over here, the inflation has come down a lot in the US, right? In fact, it come down to, I think, to a low of 2 point something. Okay, then recently it just budged back up to about 3%. Okay, it still haven't hit the Fed uh, interest rate target of 2%. After so long, it still have not hit yet. Okay, but the good thing is overall the inflation have came down, but it's not at the 2% mark. Okay, and recently, I think around, just recent only, I think around October, November, I can't remember what's the recently, they actually they further reduced slightly on the interest rate. Then the Fed also say that because a lot of people are expecting that December there's going to be a rate cut, right? But the Fed says it's uncertain, right? Why is it uncertain? To be honest, with Trump around, it's very hard to be certain, right? He's very unpredictable. You don't know what he's going to do, right? So that is a question mark moving forward. Okay, so is there a possible recession? I think in people's mind, right, there's no recession because you can see from here, the number of search for recession has dropped for this year also, right? So that means now people are not concerned about recession. People are just more concerned about the AI bubble because if you Google AI bubble, a lot of people searching AI bubble, AI bubble, AI bubble, AI bubble. So is there an AI bubble or not? Can you type in the chat and tell me, do you think there's an AI bubble right now? Yes or no? Do you think there's an AI bubble right now? What's your view? Okay, some yes, some no, some not sure, not yet. Yes, yes, yes. Okay, so I think it's 50-50. Okay, I I think the bubble is not yet, okay, because I think the valuation is not straight. But of course, there's some AI stocks that is crazy valuation, okay, pure AI. But if you look at comparing now back into 2000, right? Back in 2000, right? The dot-com boom before it crashed, right? A lot of companies are at very high valuation with no earnings, okay. But right now, a lot of the companies that benefited from the AI are actually profitable companies like your Amazon, your Microsoft. Okay. But yes, there's some pure AI companies that are not making any money. That one is a concern. Okay. But there's not a lot as compared back in 2000. Okay. So right now, I think a lot of the companies are really backed by actual earnings and growth. Okay. If you want me to give a view, right? Now the feeling of the markets of AI, right, is like the 95, 96. It give me the 95, 96 feeling. Okay. What I mean by that, right? So if you study the history, right, back in 95, 96, right, a lot of people already called the market expensive already. Right. And a lot of value investors actually fully out of the market at that point of time, waiting for the market to crash. But the market didn't crash, From 95, 96, it continued to boom all the way until a crazy valuation to 1999 before it crashed, So imagine you have sell out everything and stay out of the market, you'll miss the crazy bull run upwards, right? So my take is, I mean, the AI is pushing the market right now, but I don't think there's much of a bubble. Later, I'll talk more in terms of the valuation of the markets. Okay, so but take note, there's still a lot of hype in the AI stock. So if you want to invest in those like loss-making pure AI companies, please keep your position small because you do not want to take so much risk on that. Okay, because you don't know when the musical chair is going to end. Okay. And of course, a lot of people say that they invest in the AI, there's no returns and all this. So you have to be really careful. I think the best bet is to invest companies that benefited from AI. That's the most important thing. Okay. So if you look at the fear greed index right now, okay, the fear and greed index. Okay, the few days ago when I did this slide, I just updated today. The fear greed index was much lower figure, and now it's slowly moving from the lower fear all the way to extreme fear to fear. Okay, and I think the next few days probably is going to move to neutral. So I think in general, people are more like fear neutral, this kind of thing. Okay, there's not a lot of like, I feel there's not a lot of optimism in the market. I think it's just generally fair at this moment. That's how I'm feeling the market right now. Okay. But whether how it goes, it really depends. Okay. But right now, the situation is just like this. Okay. So the key is to really do the valuation of the index. Okay. So let me do a quick recap on how do you do index valuation. Okay. So if you remember, if you've gone through the alpha quadrant, I talked about the general rule of time, right? This is how you should look at the market. Okay. So in general, if the market is P 10 times, right, it's undervalued. Okay, 10 to 15 times is fair value. 15 to 20 times is above fair value. Anything above 20 times, right, is overvalue. Okay, so this is generally how you look at the index and how do you read the index. Okay, anything more than 25 is actually bubble. Okay, so right now we're going to take this method and we're going to go into the US market first. Okay, so you look at the US market right now, right? We are all-time high again. Okay, the US market is at all-time high again, right? This one at the start, Trump crashed it a bit. Then now we are surpassed the previous and we are all-time high again. Okay, so if you look in terms of the 10 years valuation of S&P 500, we are actually back to the one before the crash, right? The 30 times over here. Okay, so last time the 2000 also is around here also. Okay, 30 times. Okay, but you must know we are using a 10 years average. But in recent 5 years, a lot of the companies are growing much faster. Okay, so based on this sort of like 29 times, now 29.06 like actually. What is the market right now to you? What is the valuation of the market right now? Is it undervalued, UV, fair value, FV, or above fair value, AFV, or is it bubble? You just write. Can you type in the chat and let me know? What do you think about the market based on this chart? Yep. So I think based on the chart itself, it's above fair value or maybe overvalued, right? But you must understand, in the recent years, especially in these few years, because of the AI, right, the S&P 500 valuation is carried by a few companies that push up the valuation. Okay. And if I were to take a equal weightage, let's say because the S&P 500 is based on the market cap value, market cap, and they take up the Max 7 actually accounts 30% of the whole S&P 500. But let's say I equal weight every company equally, the 500 companies. This is the valuation right now. Right? I think this one in general tells the better picture of the US market right now, which is in general, right, is actually fair value. If you equal weight it, it's actually quite reasonably priced. Okay, it's not very expensive. It's also not very cheap. Okay, but there's still opportunities, pockets of opportunities here and there on like distressed assets, right? But in general, those normal compounders, right, they are already, I will say they are already fairly valued, but there's some still traded at one standard deviation. Later, I'm going to talk about them. Okay. So I think moving forward, if I base on this equal weight run, if let's say that's why I say it feels like 95, 96, because based on the equal weight, I think the US market, right, there still have some opportunity to run for the valuation to go up even higher. Okay, it's not that expensive to be scared or to avoid the market or something like that. I think it's generally still okay for the US market. Okay, so that I think I would say there's still opportunity, just that it's a bit harder to find only. So you have to be very selective on the US market. Okay, are you clear on that? Okay, so right now let's move on to the Singapore market. Okay, so the Singapore market has been a good performance for this year. Right, starting from last year and this year become a better performance because of the MAS start to review and they did some initiative and now they hit all-time high. They even surpassed their previous peak for the Straits Times Index. Right, surpassed the previous high. Sorry. Okay. So now if you were to look at the valuation of STI valuation, okay, this is the valuation right now. Okay. JJ asked, what is 95, 96? Is 95, 96 is like what I mentioned just now. The feeling is like 1995, 1996, where people feel that the market is expensive. But in fact, after that, right, even though people feel the market is expensive, the market got even more expensive because of the bubble of the .com. Okay, so right now the feeling is like that, I feel. Right, so I think there's still some room for AI stock to run based on valuation that I'm looking at. Right, but You can never know. Maybe something like pandemic happened and it will crash the market. You don't know. But based on this view, it feels this way. So that's what I mean by 95, 96. When I say 95, 96, that means 1995, 1996. Okay, in the US market. Okay, so now back to Singapore market. So Singapore markets has been, if you look in terms of the valuation, have gone up to very high compared to the 10 years. It looks like 2SD, 1SD, 2SD like that. Okay, but you must know there's a lot of change in the STI component, right? Because a lot of the STI stocks, right, starting to convert into asset light, right? So how many of you actually been to the valuation premium webinar that I conducted just recently, or the 2 years ago, 1 or 2 years ago, right? I did talk about this company called Hong Kong Land, right? And we did calculate the risk and reward, right? And the scenario play out. And within, I think 1 year, you got almost like 100% gain from the stock, right? How many of you actually bought the stock at that point of time? Can you type me? Okay, quite a few of you. Okay, so my take about the Singapore market right now is, right, because a lot of the constitution, right, there's a lot of the companies inside the STI is going to convert to asset light. So actually, the average PV will shift upwards. Okay, so I expect I still think it's very positive for the Singapore market moving forward. And with interest rate now coming down, right, and people got nowhere to put into good yield companies, right? Good yield SSB or good yield what's that? T-bills, right? I think dividend stocks is likely to get people to park their money in dividend stock, because now dividend stocks you are able to get like 4%, 5%, 6%, 7% in Singapore. So I think likely people will start rotating their money from the T-bills, the SSB, and go into the dividend stock moving forward. It seems like this way. I'm getting the feel that way. Okay. So yeah, so that's my assessment of the Singapore market. I think there's still room to run. I don't think it's expensive, because a lot of initiative to turn the business asset light. So the average should move up. Okay. It should not be at this low average. Okay, so yeah. So do you all like so far my analysis of the market so far? If you like, can you type yes in the chat and let me know? Right. Okay, so let's move forward. Okay, so right now, right, let's talk about the Hong Kong market, right? So like I told you, the Hong Kong markets, right, is the best performance this year, right? And 2-3 years ago, it's a trash, right? Anything you talk about China, you talk about what lah? It goes into the trash can, right? And I personally, I invested very heavily. So if you are our Alpha Lab member or even Dividend Machine Pro member, you know we invested very heavily into the Hong Kong market, and now it's bearing all the fruits, right? That we are taking, right? Because the time you can find quality companies that is not even involved in the US tension, just domestic. You're getting like 8%, 9%, or 10% yield. Strong company with net cash, right? So right now, a lot of the stocks have run up already. Some of our stocks are cheaper up also from that. Okay, and I don't know how many of you remember that one of the webinar that I shown a few years ago, I said that I talked about the Asian financial crisis, right? Remember, I talked about the Asian financial crisis. I said that in the Asian financial crisis, that the three countries that was badly hit during the Asian financial crisis are basically the Thailand market, Indonesia market, and the Korea market, right? And I say that the next 10 years, the next decade, right, or 20 years, they are the best performing market, right? Do any of you remember this or not? Right. So I took that analysis and I said same for the Hong Kong market. During that time, I say that the Hong Kong market is going to be the best performing market in the next 20 years, right? Because the valuation was so dirt cheap, right? Back in 2022, 2023, your valuation is the Asian financial crisis valuation, but yet the business are much stronger as compared to back in the Asian financial crisis. Okay. And now the whole sentiment changed, right? Thanks to Trump. because of Trump's unpredictable character, right? People are not trusting the US right now already, and they are going back into the emerging markets. And you can see this year articles coming, what, Chinese stock, 90% of the US investors set to increase exposure, Morgan Stanley. China market shared uninvestable tech as global fund returns. It's crazy, right? Because just few years ago, it's uninvestable. And you can see the sentiments in Reddit or it's in the investment community, read all the news, right? People are avoiding China. But right now, everybody is trying to enter into the China market. So this is what I want to tell you, is that investing a lot is about emotions, right? You really need to learn how to look at your emotions, right? Because the seeds that I planted, like this year, for my whole portfolio is up about, it's supposed to be up 50%, but recently the Hong Kong market went down. So now I'm only up 42% for this year only. But all these seeds is planted 2-3 years ago, right? So you really have to sometimes trust your conviction, right? Look at the market, look at the valuation, buy into proper good companies that still pay you dividends, right? That you can benefit from it, right? Do you agree with me? If you agree, just type yes in the chat and let me know, okay? So right now, let's say you look at the Hang Seng Index, right? You see it goes to the bottom and it just went all the way up, okay? So it haven't surpassed its previous peak, but I think likely maybe next year they will surpass this peak already. Yeah, so don't listen to Western media. Actually, you should because Western media don't understand the Hong Kong markets. Okay, so right now, if you look at the Hang Seng valuation, it's at just slightly above fair lah, right, 11.9. Okay, but if you base on their long-term average, right, it's actually 13.6. So there's still some room for them to run up to their long-term average. So I think in general, the valuation for Hong Kong market is still not stretched yet. So there's still room to run. So I likely, if nothing goes wrong, right, by right, next year Hong Kong market will continue with recovery. Okay, and the Hong Kong market index give you a very proper valuation of the whole market. Why I'm saying that is because the Hang Seng Index is based on max cap of 8%. Every stock only can have max cap of 8%. If the stock cross 8%, they will start trimming the stock and they will put in other stocks. Okay, so it's very well distributed across the all different components in the Hang Seng Index. Okay, so this one shows the proper valuation. Unlike the S&P 500, where a few companies actually carried the whole S&P 500. Okay, but if you based on equal weightage, it's actually around fair value. Okay, so I think there's still more rooms to run. All right, a lot of the Hong Kong companies are showing better results. We can expect like Baba or Tencent to show better result moving forward also. Okay, so if you look in the interest rate wise, you can see interest rate for the US is starting to fall, right? But recent cut, I think this one account for the recent cut or haven't account. Maybe just another point, maybe in between, maybe 3.5, right? So I think unlikely they're going to cut in I just guess lah. Unlikely they're going to cut in December. So probably have to wait until next year. So I think over a long term, I think interest rate should stay around this range lah. Maybe 3-4%, or maybe I think it will be 3-4% the range. I don't think it will go very low. Okay, because if you go very low, you will just cause the inflation again, right? So I think 3-4% is a more reasonable one for the US market. Okay, so I think in general, right, most sector should benefit from the low interest rate when the interest rate drops. So you don't need to worry. Okay, unless the interest rate is a sharp drop. The interest rate is a sharp drop, then it will affect the banks a lot. But if the interest rate is a gradual drop, it's okay on the banks will adjust their saving account, the interest to match up. Okay, it just takes some time only. Okay, as long as not sharp drop, I think it's okay. Okay, so my take is not to concern too much about interest rate, but rather you should learn how to structure your alpha portfolio for 2026. Okay, so there's a few ways you can do. There's a few ways that you can look for ideas. Okay, oops, sorry. There's a few ways you can look for ideas. Firstly, you can structure in a way where your portfolio, right, can actually handle the interest rate right? Regardless the interest rate, your portfolio can handle. This is one way. Okay. Another way is you can structure in a way where your portfolio is to manage risk, right? That means you look at distressed assets, okay, which I'm going to uh, talk more later. Okay, it's all about understanding risk. So later I'll explain to you. Or you can structure in a way where it's what I call special situation with catalyst. So regardless how the economy goes, right, because there's a catalyst, the thesis will still pan out one. Okay, so later I'll show you example of all these different company. Okay, so but right now I want to spend some time talking about how do you manage risk. Okay, so when it comes to investing in stocks, right, you always hear a lot of people say that, okay, how much they're going to make from this company. Okay, so I think this is the wrong way, right? I think this is the wrong way, right, to look at investment. Okay, so instead of looking at the upside, right, you should look at how do you manage your downside. Okay, so right now, let me give you an analogy. So for instance, I want to make a bet with you. Okay, if you jump down from this building and reach the first floor, okay, as assuming there's no lift, you will get $1 million. Will you do it or not? Will you do it? Yes or no? Type in the chat. Will you do it? Will you do it or not? If I say that you get off this building, you reach the first floor, there's no lift, you just from the top you go down, you will get $1 million. No, you see, all of you will say no. Why? Because what's the point of getting $1 million where you don't have a life to enjoy it? Okay. So investing in companies just by focusing on how you can make will look like this, right? How much money you can make will look like this. Okay, you permanent loss of capital. Okay, if you just focus on upside but not how much you can lose, right? This is what we call permanent loss of capital. But now, instead of let's say jumping down, right, which give you a permanent death, right? I give you the option. You can abseil down. You can parachute down. Okay. Is there risk when you abseil or parachute down? Not? Yes or no? Is there risk or not? Even though I give you the option to abseil down the building or parachute down the building, is there risk or not? Yes or no? Yes, right. Your rope can snap, your parachute can get a hole and you can fall. Okay. But we all know that there's risk in abseiling. There's risk in parachute, but the risk is minimum. Okay, but your chances of survival is high. So when you reach the first floor, right, you're able to get your $1 million. Okay, so what I'm trying to tell you is that I'm not telling you to do not take risk. Impossible. If you don't take risk, if you don't take risk, you'll make mediocre return. You'll make average return. Okay. But the key is to really take risk, but take calculated risk, looking at the risk reward ratio. Okay. Not to avoid risk. Your job as an investor is supposed to take risk. Right. And you want to calculate what's the risk versus the reward that you can get. As long as a risk that you take is not permanent loss of capital, your chances of probability of making money is very high. Okay. So how many of you have so I think some of you have been through the advanced valuation method that I teach you. I talk about the risk reward ratio. Yeah, so that's what I'm talking about. You're supposed to always have a risk reward and calculate the probability in your mind, right? What's the probability of this thing risk happen, and what's the probability of your reward happening? That's the most important thing. Okay, so if you can remember in the Alpha Quadrant live webinar, right, I talk about when is the best time to buy. When's the best time to buy in the Alpha Quadrant live webinar? Type in the chat. I mentioned there's two scenarios is the best time to buy stock. When's the best time? Type in the chat. Okay, Chris got it. Hazel got it. All right. So the best time to buy is market crash and the company have temporary issue. Okay. And I talk about why I like to look at companies' temporary issue or companies that are distressed. Because sometimes when the company gets so distressed, right, when it recovers, it's going to be a big amount of gain for you. Okay. Because the valuation already so beaten down already. Right. In fact, because it's so beaten down, it reduced the risk significantly. Okay. So now let me show you one example of a company that I bought myself. Okay, and I hold it to now. I'm just waiting for time to sell. Is this company called Pico Far East? Okay, so what happened is back in 2020, right? You can see over here, Pico Far East share price actually fallen at 64.7%. Okay, why? Because their main revenue generator is actually the exhibition business that accounts 83% of the total revenue. So what happened in 2020? COVID pandemic, right? So when COVID pandemic happened, right, this company's majority business is in China and some business in Singapore and other parts of the world. Okay. And because of the lockdown, right, there's no exhibition, right? The share price tanked significantly. But did I buy during this crash or not? Did I buy during this crash? No, I did not buy. Because I at that point of time, I was busy looking at other stocks. This is the first thing. Second time is also, I also not very sure how long the pandemic going to last, right? So I didn't want to take the risk reward. I got other better stocks that are not affected by pandemic, but yet they give me a good risk reward. So I was buying other companies instead of this Pico Far East. So I missed this opportunity, but the share price just rebound because they're still profitable at the point of time, and China opened up very fast. Then they got back into profitability. Actually, in fact, they didn't make losses. Okay, so my big opportunity came is when 2022 the sentiment of the Hong Kong market was so bad that the company share price actually went down again, despite them showing like 50% growth in earnings and revenue. So I start to accumulate my position over here. Right, this is the part where I start. Okay, I bought about $1.13. Okay, so at this part, do you think my risk reward ratio is very high? Do you think my risk reward ratio is very high when I bought over here in 2022? Yes or no? Yes, right. Because the earnings already show they are recovering already, but it goes down because of sentiment. Okay, later I will do everything into financial numbers and show you the risk reward. Then you understand what I'm talking about already. Okay, so based on this part, I really feel I got sort of like a risk reward. Then I want to look at the history of Pico Far East. So I went to take a look at the point of time. This is the chart that I saw. Okay, so this company have a long history of revenue generation with growing revenue. Okay, in fact, the revenue was affected because of COVID pandemic, but they are recovering. Okay, so they basically got track record. So I think they will surpass their previous peak. Okay, if you look in terms of the profit, right, they have long history of profitability even through 08, 09 and all the different crises, right? And despite COVID pandemic, they are still profitable, right? And this was the chart they are recovering already. And back in 2022, it goes down because of market sentiment. Okay. So I expect them to continue to recover. So you look in terms of margin, they are generally still very stable. It's just that the net margin was affected because of the expenses and all this. Okay. So overall, I think they're going to recover. That's what I'm seeing. Right. So when I look in this company, right, I'm betting that the probability of them going back to their original margin or maybe 5% or 7% is very high. That's what I'm looking at. Okay. So look a bit of their revenue generation. So this is their positive cash flow despite COVID pandemic, and they have very minimum capex. So throughout the years, they have been even during COVID pandemic, they are generating positive free cash flow. On top of that, this company is in the net cash position. Right, the first half that I looking at net cash with minimum debt. So basically, at the point of time, their cash is about 1,327 million Hong Kong dollar. Their debt is about 732. So their net cash is about 595 million Hong Kong dollar. And at that point of time, right, their market cap's around 1399 million. So that means the net cash is about 43% of the total market cap. So this company very hard to bankrupt. Because of the cash position, it reduced my risk further already. Okay. On top of that, despite COVID pandemic, they still try to pay dividend. In fact, this company have a track record of paying increasing dividends. And because of COVID pandemic, they reduce, but they still pay, and it's increasing. So I bet that this company will go back to the previous dividend, 14 cents. Actually, it's 13.5 cents. So but I round it up to 14 cents. Okay, I bet it go back to the 14 cents. Right. So I'm being paid to wait for the recovery. Right. So this one, getting dividends further reduce my risk at that point of time. Okay. Can you see until this point, I never thought about how much I'm going to make, I keep talking about how I'm managing the risk. Can you see now? Yes or no? Yes or no? You type in the chat. I need you all to be very clear. Can you see all the one I'm talking about is managing risk? I never thought about gain. Gain is secondary, but the important thing is the risk. Can you see that or not? Can you see yes or no? Can you see how I'm explaining to you? So all you get the concept. Okay, so I paid $1.13, right, back in around 2022. The dividend is about 5 cents. So my yield is about 4.4%. I've been paid to see the recovery, which I said the future risk will reduce, right? So if the company were to pay back the 14 cents dividend, my yield on cost will easily be 12%. Okay, which I think the probability is very high. Okay, so now let's move on to talk about the valuation. Okay, so that at the first half 2022, right, the book value is about, their NAV is about $1.75. So during 0809, I went to look back at history. During 0809, they dropped about 50% book value, so 0.5 times. So if you take 0.5 times multiplied by the 1.75, right, my risk that I'm going to take, the possible drop is 88 cents. So based on my current, the share price that I bought, right, my possible drop is 22.1% risk, which is about 25 cents drop. Okay, so do note that I'm being very conservative here. I take the book value at 50%. Okay, but can you remember earlier on that I told you that their net cash position is 43% of the total market cap? It shows that the company is very, very strong already. So my risk actually is less than that, but I just be very conservative. I just say 50%. Okay, and I don't want to bet anything. I just bet they go back. I don't bet them go back to their previous high. I bet their profit goes back to the pre-COVID profit, which is 256 million. Right. So if 256 million is divided by the earnings per share at the point of time, right? Okay, let me show my iPad. Okay, so if you at the point of time, right, they are pre-COVID, I think back in 2019, right, is 256 million Hong Kong dollar. Okay. And if you divide it by number of shares, the EPS, right, I expect the EPS to go back to Hong Kong dollar 0.207 cents. So 20.7 cents. Okay. So if you look at their PE average, it's about 12 times. They most of the time will trade to 12 times. Let's say I be conservative. I don't take 12 times. I take 10 times. So that means my estimated upside intrinsic value should be if let's say they go back to the previous earnings, which I think there's a probability because they already start recovering already. It's just that the sentiment hurt them. Right. It's going to be $2.07. So that's the intrinsic value that I'm looking at. Okay, that's my upside. Okay, and I want you to take note, I'm not taking 12 times. I'm taking 10 times. So if I take 12 times, actually the intrinsic value is $2.50. So if you were to go back to the slide, so my reward is about $2.07. So my upside is 94 cents, which is about 83.2% gain. So you take this divided by this, my risk reward ratio based on just base scenario, I never based on bull scenario, it's already 3 times more than 3 times Do you think I should take the bet if looking at this? And some more the company have 43% of the cash in the market cap, 43% of the market cap is cash. Do you think this is worth the bet? Yes or no? Yes or no? Type in the chat. Yes or no? Okay. Yes, right. And until now, I focus a lot on the risk. I never thought the upside is only I just calculate only. But everything I talk about, majority is about the risk. Okay. So I bought here. Now the share price, I bought $1.13. The share price now is $2.76. In 2022, I received about 6 cents dividends. 2023 is about 9 cents. 2024, they give a special dividend. On top of that, they also give their they go back to their previous dividend of 13.5 cents. So in total, right, 2024, I got my dividends is 16.5 cents. 16.5 cents over my $1. Okay, let's talk about the regular dividend over my $1.13. It's already 11.5% dividend yield on cost already. Okay, if I include the special dividend, my yield on cost is 14.6%. Right, and I hold since 2022 until now. Right, the period is about 3.33 years. So my annualized return inclusive of dividend is 35.7% per annum. And the recent first half result already show they still up 11%. Okay, and the valuation is not stretched. Okay, and the recent TTM profits are already surpassed the pre-COVID profit of 256 million. It's at 378 million, and it's also at their all-time high profits. So if they start to expand their P somewhere, I think likely I can push up my returns to 40 or 50% compound annual growth rate. Okay. All right. So I'm right now I'm just waiting for the company to reach a very stretched valuation. Then I start to trim my position. Okay. So this is an example on looking at distress situation. Okay. So sometimes when there's no ideas, right, you look at there's always distressed company. In every market scenario, right, there's always distressed stocks on. So distressed stock is in every scenario. So don't tell me there's no ideas. There's always ideas. It's how you go and find it and how you go and calculate the risk reward ratio. Okay. Now it's too late to buy into Pico Far East. I don't think it's a good value right now. Okay. So don't look at it. Okay. So let me show you another example that we recently did. I just did a few months ago. Right. It's what I call special situation with catalyst. So special situation with catalyst is what I thought about. That means you with this method, right, you no need to care about the economy on. Because if the economy is down, the situation will still move based on the catalyst. Okay, if the economy up, it will still move also. It disregards the economy because there's a catalyst out there that will push the share price. Okay, so there's this company called HKBN, okay, which is a duopoly, okay, in the Hong Kong market. So in the Hong Kong market, there's two broadband players. One of them is actually HKBN. Okay, so what happened to this company is, right, the share price tanked from a high of $15 all the way to $2 plus. So the drop is like 84% drop, right? So the key when you understand, you need to understand why the company's share price dropped, why the company's share price has fallen. Okay, that is the most important thing. So I bought over here just before the price shot up, then I sold already. Okay, so you need to understand the situation. What caused the share price to fall, right? Because the reason that caused the share price to fall, right, if that reason is disappear, the share price will go back. Do you agree with me? Yes or no? You do agree with me or not? Hey, very important because this one is high level investing I'm teaching you. Do you agree with me? Right. The moment the situation, but the key is to really learn how to pattern recognize all these situations. If you have analyzed multiple companies like me, you will understand situations on. Because you have seen so many situations, you can relate this with other situations and you know that this is temporary. So for us, right, we know this thing, right? Because of us, after 10 over years of flipping multiple companies and visit the management, we got remember if the valuation webinar I talked about it, right? I said everybody have to form their encyclopedia. Your encyclopedia is encyclopedia of companies that you see so that you can recognize the patterns. So I got my encyclopedia is very thick and it's still growing. Okay, so I bought around here just before the price shot up, then I sold. Okay, I and the reason that I buy down there is situation with catalyst. Let me explain to you. Okay, so the reason why HKM, you need to understand why HKM fallen. Okay, HKM crash because even though they are dual poly market and very strong, because they took up debt, right, to run the business. Okay, because it's a very stable business, broadband, internet. You just run on debt. It makes a very good capital good capital structure. Okay, most this kind of like sort of telecommunication companies they always do that one. Okay, so when the US start to spike the interest rate, very aggressively, they are affected because Hong Kong is pegged to the US dollar one. So when the US interest rate suddenly spike crazily, the HIBOR interest rate also spike. Because this whole business is run on debt. Straight away, can you see the interest rate went up almost 3 times. Almost 3 times, but it's 2 times plus. Can you see that? Can you see now? The interest rate jump up. The net interest they're paying, the interest that they're paying from 236 million, they suddenly jump up to 668, then jump up to 851 million. Can you see that? Right. So it's the interest that affects. So the moment the interest rate drop, do you think they will benefit from it or not? Yes or no? Do you think the interest rate drop, they will benefit from it or not? Straight away, the share price will reverse. Yes or no? Yes, right. So I think in 2025 they start to stabilize the interest rate starts to drop slightly. They stabilize at 600 plus million. Okay, this is the peak. So at this peak, they are paying around 7.2% interest. 7.2%. That's crazy, Right? And they keep their loan to maturity very short. 1 year plus, 1 year to 1.4 years. Okay, so you can see here their profit is literally affected because of the high interest rate. Right? Because the spike interest cost, right, they reduce the profit. And because they reduce the profit, they reduce the dividend. So previously they pay very good dividend, 77 cents. Then they cut their dividend by more than half. Right? So if you understand companies, right, when they reduce dividends, the share price will decrease. So that caused the main impact for HKBN. Right? So but in 2025, right, they are earning stabilized already. Okay. So when did the situation happens? Okay. So here is where the catalyst appears. Okay. That give me the risk reward. Okay. I didn't buy and wait for the interest rate to recover because I don't know when the interest rate going to recover. Right? Do you know when the interest rate going to recover? You don't know at that point of time. So I didn't buy because of the interest rate recover. I buy because there's a catalyst appear. Okay, so let me show you. So what happened is, right, back in August this year, China Mobile offered to buy majority stake in this company. Okay, so the some of the institution and the HKBN CEO rejected the offer and said that it's not good. Right. So China Mobile offered at $5.23. Okay, and they say if you were to exclude the special dividend, the buy over price will be $5.075. $5.075. Okay, it's not this 4.91 cents. It's 5.075 cents. That's the amount after the special dividends. Right. So the share price was hovering around 5.075, 5.08 at that point of time. Okay, and the closing date is 17 September 2025. Just right, that was the night where the Fed going to announce whether they're going to cut or increase the interest rate. Okay, but the interesting catalyst happened like this. So what happened is that in the later part of the year, the Hong Kong HIBOR rate, the interest rate actually dropped significantly sharp. You can see on the second half of the year. On the second half of the year, right, the Hong Kong HIBOR rate dropped significantly. Can you see here? But the question is, why the HIBOR rate dropped significantly, but the HKBN share price never moved? It still stays at $5.08, $5.75. Why? And you can see the HIBOR rate dropped all the way to around 2.08%. Remember, I told you the previous year they paid 800 plus million. The interest rate was 7.2%. From 7.2%, it dropped to 2.08%. So if you were to calculate the rough gauge of the interest, there's going to be probably a 300 million jump in profits, right? So the reason this is the catalyst. I saw this chart, right? Rusmin showed me this chart. I said, oh, there is a situation here. Why I'm saying that is because, right, the share price cannot move because of the privatization offer. The privatization offer is there. That's why the share price did not move. So that means I got a possible upside over there, you know. So that means your earnings of 200 million, the following is going to jump the moment they refinance, because their interest rate, their interest is within 1 year they're going to refinance soon already. They're going to jump to 500 million. So if they jump, the share price also will jump, you know. Right? But because of the privatization offer, the share price did not move. Okay? Can you all follow me or not? Do you all still follow me? This is a very high level investing. Can you follow me or not? I'm looking at, okay? So if you were to look at the price to book of HKBN, their average traded before the debt hitting them, their average is about 4.56 times price to book. Right? They actually traded above 6 times most of the time because of their consistent dividend and everything. But because of the high debt, they dropped until very low. So at that point of time when the offer, right, they were traded about 2.6 times book value. Okay. So there's a possible increase in the earnings. And do you think that there's a possible increase in dividends? Yes or no? When the earnings increase, do you think that dividend will increase? Yes or no? Yes, right. So earnings increase, dividend increase, the share price will increase. Okay. So based on that, let's say they were to go back to the average, their price to book, right? I calculate their possible reward is about $7, 7.068. Right? Let's be conservative. Let's take it as $7. Okay. Okay. So I just take it as $7. So my upside is $7, you know. But why I'm taking that, why I really need to take this back because my downside risk is very low. Can you see that? I'm taking this back not because I can make my upside, no, because I know my upside is confirmed already because the interest rate dropped already for HIBOR. But I'm looking at it's because my downside risk is very low. Okay, so what happened is let's say the probability of them privatizing is very low at the point of time, I think, because the management rejected it. So the management hold a certain percentage of the share, about I think 10-15%. Then GIC said they also want to reject, but at the last minute they pull out. Okay. But so the key about China Mobile is they need to get about 75%. Then they will take control. Okay. So my take is, right, in the event, let's say they manage to privatize the whole business. What's my loss? My loss is only that 0.005 cents and the brokerage fee only. Right. So I bet my loss is very minimum. Okay. And if they did not manage to cross the 75% mark, right, the drop in interest rate will cause the share price to spike up. Okay, this is one option. The second option is China Mobile will come back and offer a second price to privatize the business again, a higher price to privatize. Do you agree with my risk reward that I explained to you or not? Can you see my thoughts or not? Can or not? Yes or not? Hey, I need you all to be clear. Can you see my thoughts or not? How I calculate the risk reward, how I look at the risk. I dare to bet this deal is because the risk was very minimum. My only loss is the brokerage fee only, actually. Okay. But my upside, I got two optionality, you know. One is China Mobile make another offer. Second is, right, the interest rate already confirmed already. My upside is already confirmed. Okay, wait, give me a minute. I don't know why my face disappear. Give me a minute. Okay. So my upside is China Mobile going to make a second offer. And second, right, I'm going to have, what's the thing called? My another upside is confirmed because of the interest rate already dropped already. Okay. So regardless, I think the risk reward ratio is very high. It's about 300 over time. If you were to let it count. Okay. So that is what I'm betting. Okay. Just ask, how do you get $5.075? $5.075 is the offer price after minus the special dividends. That is the offer price that they offer to privatize the business. Okay, I bought at 508, slightly above the premium because of the brokerage fee and all this. Okay, it's basically this cost is actually the brokerage fee cost. Okay. So what happened? Just right on the 17th, okay, on the 17th, right? On the 17th September, the deal closed. They announced they crossed 75%. And China Mobile said they will continue to stay listed, right? And they sell back 3% into the market. And the following day, the share price jumped from $5 all the way to, I think, as high as $9. Then it hover up and down. Okay. But what I do is I just sold I sold at $7.95. Right. So within 1 month, my gain is 56.5%, based on situations. Right. If I analyze this return, it's going to be a lot. Okay. But I just tell you, I make 56% in just 1 month. Okay. And I concentrated on this position. So this is also one of the positions that helped me to pull up this year-to-date return this year. My year-to-date return, right, at just 1 or 2 months ago was 50%. Right now, slightly dropped because recently the market just pulled back a bit in the Hong Kong market. It's normal. Okay. So now about up 42%. Okay. So this is the reason I tell you, in the event, let's say I tell you, if there's crisis, this situation will still happen. Okay. So this is what I tell you, special situation with catalyst does not matter how the economy move on. It's based on the catalyst. Okay. So let me explain to you another special situation with catalyst that I do also. Is you know, a lot of people like to invest in pharma company, right? Pharmaceutical company, and they bet on the next drug approval, FDA. You all know that, right? So buying pharma company is like looking at upside but never see downside one. Because the moment they fill the FDA, the pharma company will drop 90%. You all know or not? The moment they fill all the thing, right, the share price will drop 90%. Do you all know? Do you all know that? Most of the bastard pharma company. So if you betting on all this pharma company, whether they get FDA, make sure you be a small percentage. Because if you concentrate on such company, you will never go up one. Okay. Okay. So what I do is, instead of looking at the upside, right, I look at my downside. Instead of looking at pharma that can pass FDA, I look at busted pharma. I look at all those pharma stock, right, that was busted. The share price dropped 90%. Right. And usually when they drop 90%, they will drop below their cash level. So example, the company's cash is 100 million. The company market cap is 100 million. Sorry. The company market cap is like 40 million. But inside, they got 100 million in cash on. Because they busted it. Then what's the catalyst? The catalyst is they announced that they're going to go for reduction, workforce reduction, and they're going to do for liquidation. So liquidation is what we call catalyst, because this liquidation usually happens within a year one. So I bought one busted pharma last year and I hold until this year. So my gain is about 10. It didn't turn out as well as me because there's a lot of other costs, so it minus off. So it didn't turn out as good as what I wanted. So, but I hold it for 1 year. It still go up about 11 to 12% for me. So it's quite decent. I take it as a money market fund for me. Okay. But my risk is literally very minimum. Right? Because the whole company is based on net cash on. Right? And they're going for liquidation. Liquidation, that means they just clear off everything, just return you the cash. That's all. Okay. I've seen before busted pharma within like 6 months, they can go up 50% because somebody come and do reverse merger. So busted pharma got 2 scenarios. One scenario is most of them go for liquidation. So you'll make the like maybe 10% return. Sometimes if they liquidate fast, within 6 months, you make 10%. So annualize it is 20%. Okay. So in that case, they took 11 months to liquidate. So I make about 11% in 11 months. Quite decent. Okay. I've seen cases of another pharma, within 5 months, they do reverse merger, they up like 50-60%. Right. So there's this case. I'm always scouting all these busted pharma, low risk but high reward type of scenarios. Okay. So what we usually do is we usually consistently looking for such bet, right, to boost our returns, right? Overall, you have your core portfolio where you host the good company. Then you have all these small portfolios where you keep churning on. That means situations like distress, situation with catalyst. You buy like HKBN, right? Help to push up my portfolio. All these are extra booster to my portfolio, right? So example in Alpha Lab, we have this thing called satellite where we put all this situation play, right? So right now in the satellite portfolio, we have one distressed assets that exactly like Pico Far East right now. The earnings all show very good result, but the valuation still depressed. And we got another uh, uh, situation with Catalyst, which I found it one, which the Catalyst is going to happen in another 2 or 3 months already. It's going to happen already. And the Catalyst will continue run for until 2027. So there's a lot of upside for this company. I think it's way more upside than HKB, and it's likely I think I have to turn off the thing. Okay, so my camera got problem. Okay, so the catalyst for this situation, right, can easily, there's a probability of double or triple of this portfolio within the 1 or 2 years, right? Okay, so these are types of companies that you can look out for lah. Okay, so you just take note about it. Okay, it's not about the gain, but rather how can you bet with minimum risk and compare it with the potential upside. Okay, and you also need to understand the situation and calculate the risk reward ratio. Okay, so now can you see how I manage my risk based on my purchase on the using the risk reward ratio? Can you see that or not? Yes or no? Okay, because I did a valuation one, I show people, but now I show you the actual one that I actually did real life for myself. Can you see that? If you can see, can you type yes? Can you see? Can you see how I keep talking about managing risk? I never talk about gains, I all talk about managing risk. Yeah, I think you guys get the concept. Okay, so this is one way how you can look at risk and manage it and buy into distressed asset, which is have low valuation or special situation with catalyst. Okay, but this method I can tell you is very tedious. Okay, and it requires a lot of work, a lot of searching, a lot of understanding. Your encyclopedia have to be very thick, which is the reason why I also didn't want to teach this. Okay, because no one will want to do it unless you are very passionate about it. Okay, so that's why I usually only share it in Alpha Labs as idea, not in Alpha Quadrant to teach. Because this method, because even if Alpha Quadrant you are not good, you're doing this method, you even not good. Okay, you need to be good at the initial Alpha Quadrant method. Then you can go up to this thing. Okay. Okay, so another way to look at lowering risk is to really buy into quality companies. Okay, so this is what you learn in Alpha Quadrant. Okay, but I give you the idea of special situation with catalyst and give you the idea of distressed asset so that you also know there's such type of companies that you can look at for. Right, if you manage to learn it, you can do it. Okay, but when I explain to you, you sort of also learning how I'm looking at it from different lenses. Okay, but for me, my personally majority of my assets are in distress and in situation catalyst lah. Okay, so let's look at how do you lower your risk just by buying into quality companies. Okay, especially during crisis, is the best time to look into all these quality stocks. Okay, so the key is why you want to buy into quality companies because you want to sleep soundly and peacefully at night. Okay, that is exactly how Alpha Quadrant is created, right? Investing is not supposed to be stressful. Investing is supposed to you compound your money, right, while you can sleep properly at night. If you cannot sleep properly at night, that means you are doing something while you're investing. Okay, so I would say this is the easier method when it comes to investing than looking at distressed asset or situation with catalyst. Okay, but of course, distressed asset and situation catalyst will give you higher returns because you are more actively looking for all these companies. So you have to take note, right? So sometimes you are more active, right? You tend to get higher returns. Okay, if you are actively looking for ideas. Okay, like me, for me, I'm a what I call the treasure hunter type of investor. Right? I know myself. This is my method. I love this style. Right? I like to treasure hunt. Right? People throw the trash into the trash can. I go and see, the person accidentally throw gold. Then I just pick up the gold only. Right? So that's my method. Okay, but some of you just like to buy into good company and just see the tree keep growing. Usually I call you tree grower, right? You like to grow tree. grow, you look at the quality tree and let it keep growing, right? So all these are quality companies. You require less work as compared to the one that I'm doing. Okay, but because I'm very passionate and I enjoy this work, so that's why I like to look at these type of companies. Okay, so then you just need to keep the watch list and you wait for the right price to buy me. All right, you don't need to be so active like me. Okay, so how do you look for quality companies that are recession proof and interest rate proof? Okay, so now let me share with you a quick 7-step criteria from the Alpha Quadrant as a refresher for you. Okay, so by following this method, you should prepare yourself for possible crisis, interest rate, or any environment. Okay, so when you search for any company, right, you need to see how the company performed during the past crisis. Okay, so you need to know what are the different crisis points. So what are the different crisis points? Can you type in the chat and let me know what are the different crisis points? Okay, you need to know, huh? Let me test you guys, see whether you know. What are the different crisis points? Your 0809, right? Your 0809, your Euro debt crisis. Can you all remember or not? Or you're too young already? Okay. So these are all your different crisis points, right? Your 0809, your 2011, your China stock market crash, your US trade war, your 2020 COVID-19 pandemic, right? So you need to know all these crisis points, and you need to look at how their revenue, whether their revenue decrease or increase. What's the percentage of decrease of their revenue or their operating income? Okay, why am I using operating income, right? Which in short we call it EBIT, is because earnings can be distorted by a lot of exceptional items. So the operating income are very clean cut. So you want to do a quick analysis on this, right? So we look at the operating income. So if the revenue and net profit drop less than 10% at all these crises, I would say that this company is highly recession proof. Okay, if it drop between 10 to 20, it's maybe mid-level. If it drop more than 20%, their revenue and net profit is likely low-level recession proof. So they're very prone to all this interest rate, everything. Okay, so if you, what we want to do is we want to look at the company that are high level and mid-level. Okay, so example, let's look at Costco. Right, so if you look at Costco, right, if you were to do their revenue, right, this is their revenue, and these are the different crisis points. So you can see, only 0809, they only slightly drop negative 1.5%, which is high level recession proof. But the other recession, they all make gains, So that means this company is highly recession proof. You can see from here. Okay. Then you look at okay, I put my face at the side. Then now you look at their operating income. All the different crises, except for 0809, they are negative 11. But other crises, they are positive gain on it. So this company is highly recession proof. Okay, so that's why I can understand why Charlie Munger love Costco so much. Okay, let's look at another company called MSCI. So MSCI, they do the index business one. So if like you say MSCI World Index is their one. So as long as you use their World Index and you create an ETF, you have to pay them money, right? So it's a very recurring business lah. Okay, so you look in terms of their revenue, this is their revenue, and you see all the different crisis points, they are positive, So I know I buy into MSCI, let's say I buy in the good valuation. Do you think when the crisis happen, I will be affected or not? You look at their operating income, also all positive during crisis. So let's say if the next crisis happen, do you think this company will continue to do well? Yes or no? Type in the chat. Do you think this company will continue to do well based on this track record that you're seeing? Yes or no? Yes, right. Very highly, because they already proven to you that they have a track record of doing well during crisis. Even crisis, they also still make money on. Right? So this is how you look at it, right? The first point you look at. Second point is you want to buy into recurring companies, right? So let me do a quick refresh. So remember during the Alpha Quadrant, I talked about why we don't look at non-recurring business, because non-recurring business have to consistently consistently go and find new customer. So when you consistently, your customer don't come back to you, you have to keep finding new customer. Do you think it's easy to grow the revenue? It's not easy. That's why you see construction business, all those non-recurring business, they tend to have very lumpy revenue. But if let's say every year your old customer keep coming back, and on top of that you stack your new customer, do you think this is easier to grow the revenue? Yes or no? Yes, right. It's easier to grow a recurring business as compared to a non-recurring business, right? Let me do a quick refresh on what are the level of recurring we're looking at, right? Anything below 49%, I will call it low-level recurring, right? Mid-level recurring, I would say between 50 to 70%. High level is about 71 to 100%. Okay, so the criteria that we look at is between this area, 50 to 100%, right? So that's what we look at. So where do you look for the recurring segment? Very simple. You just go into the 10K report only. You go into the 10K report, then you go and look into their revenue, and then you see how they actually do the talk about revenue. So you see the revenue, subscription revenue is earned primarily from renewable contracts and all this. Okay, so this one is MSCI one, right? So MSCI got the asset base and the recurring subscription. So as long as you do the you use their ETF, right, under their name, you have to pay them money, right? So if you look at MSCI, they're about 97% recurring. Okay, in fact, if you go to their presentation slide, you can literally, they tell you 96% recurring revenue. Can you see that? 96%, 73% recurring subscriptions. Then retention rate 90%. So you can see from here on easily MSCI. Okay. Then now you look at Costco. Costco very clear cut . Some companies are just like Costco, very, very clear cut. Straight away, you see the revenue, net sales is all grocery. Membership is subscription, 100% recurring, right? So what you want to do is you go into the 10K report. You go and see their revenue segment breakdown. Then you ask yourself, is this recurring or not recurring? Remember, I teach in the Alpha Quadrant. Remember or not? Yes or not? All right. Yes. I want you to type yes if you remember what I just taught you. Yes? Okay. Okay, so let's move on. So next is criteria number 3. You want to look for the company, right? You want to see how they are growing is revenue, right? You want to see the growth of revenue at least 5%, right? Right. Why we look for revenue growth instead of profit growth is because, right, you think about it, your revenue is like your salary, and company have their company expense, right? You also have your own expenses. As much as you want to save your expenses and generate more savings, which is the company's profit, there's always a limit when it comes to saving on, and there's always a limit when how much the company can cut, right? So in order to grow your revenue, the profit, the revenue have to grow, right? If the revenue don't grow, the profit very hard to grow on. As much as you cut, there's always a limit, right? Do you agree with me? Right? So that's why I always look at revenue growth, right? At least 5%. Okay. So if you look in terms of Costco, right, the 17 years CAGR growth is about 8%, 10 years is about 9%, 5 years about 10.5%. In the recent 5 years, they have been growing very fast because of the COVID pandemic boom. Okay. But I think over a long term, 8-9%. That should be their average. 8-9%. Okay. MSCI, very good, 10%. Right. This company have been growing 10%. And moving forward, if you think about sorry. If you think about ETF, I think likely they're going to continue to grow. Okay. Then next is you want to look at companies with high return on invested capital. That means you want to look for asset-like companies, right? I already show you in the Alpha Quadrant that asset-like companies are in all industry, right? They compare the asset-light versus the asset-heavy in all the different industry, right? The asset-light company will always outperform the asset-heavy companies. So we want to look at asset-light companies. So the ROIC, we want to have at least 15%, but best is 20% above. So if you look at Costco, right, the ROIC is above 20%. Very good, right? We say best to have consistently above 20%. MSCI, 100%. This company is literally asset-like one, super asset-like companies. Okay. Then after that, right, we want to avoid companies that have too much debt, right? So if the company has too much debt, you'll go bankrupt, right? So we look at their debt to cash flow ratio. So if you look in Costco, right, debt to cash flow, we say the benchmark must be below 5 times, right? So Costco has been reducing their debt recently, so it's even below 1 time. So this company will never go bankrupt, man. Right? If you look at MSCI, it's the same thing, less than 5 times. Okay, so they will never go into that issue, one, right? So you look at WeWork, they go bankrupt because why? Because they got no cash flow to pay your debt, right? So that's why every time I say debt must compare with the cash flow one. Okay, then next is make sure that the company is in the tier one industry lah, right? We don't want the company to be in the driving an aeroplane then facing headwind, then very hard for the aeroplane to move. If the aeroplane is driving and the headwind comes, the aeroplane will grow very slowly one. Right? We want the aeroplane to be positioned in a tier one, right? So we want to look into growing industry, like example, digital ads advertising. People are spending on digital ads. The newspaper and television business is going down already. People are not spending now there. So you don't go into all this television or news. You go for new age digital advertising. Do you agree with me or not? Yes or no? Right. E-commerce also, you still want to invest in retail. Now e-commerce is up and coming. Right. So if you look at Costco, their e-commerce business also growing at double digit. Their MSCI, there's new growth in ETF because now a lot of interest in ETF. So moving forward, they're also in a very tier one industry. Do you agree with me? Right. Do you agree with me that Costco and MSCI is in a tier one industry? Right. So my take is you focus on those like fast growing industry, those industry that is still tier one, right? Like your healthcare, your transport, your financial service. AI also is tier one now, e-commerce also. Okay. Then finally, you don't want to overpay for the company, right? Because I say a great business can be a bad investment if you purchase at the wrong price, right? So if you look at Coca-Cola, if you pay at the wrong valuation at here, the high valuation, it takes you 14 years to break even, 14 years, must hold 14 years to break even, right? If you look at the valuation at the point of time, 1998, they are traded at above 1 SD, In fact, they are traded at 2 SD, So actually, in order for you to prevent you from making bad choice, you don't invest in companies that trade above fair value, right? Especially those that is above 1 SD, 2 SD, you avoid. If you avoid all these company, your probability of generating returns is very high. You just buy either fair value or 1 SD below, right? You will make higher returns already. Do you agree with me or not? Okay. So right now I show you Costco. Do you think, based on this chart that I show you, do you think the next 10 years the probability of Costco making a lot of money for you, let's say invest, you make a lot of money from Costco, is it high or low? Based on this valuation chart over here, is it high or low? Is it high or low? Right now, it's low, right? Right. So based on current valuation of Costco, I can tell you, if you invest Costco right now, right, your next 10 years return won't be fantastic one. Right. I want to avoid. Okay. So you wait for the right time. No need to invest. There's so many stocks. You need to invest Costco, right? So as long as you buy average and below, and you don't overpay, your chances of higher return is very, very high. Okay. So let me show you some example that we shared some example during Alpha Lab webinar in 2022. Right? We tell the member, hey, this is cheap, this is cheap, this is cheap during 2022. And what happened now? Okay. So in 2022, we shared Amazon. At the time, the share price was only $96.79. They said, okay, undervalued. Okay. So if you had bought Amazon at that time, you hold until now, you up 156.64%. In fact, your annualized return is 36.5%. Despite Amazon going up and down, up and down, up and down, up and down, and now Amazon is still trading at low valuation, yet you still compound 36.5%. Right. So can you look at this? Do you think you can sleep soundly with Amazon in your portfolio? No? Yes or no? If you are back in 2022 that we shared this idea to you, definitely, right? Then we also shared Splunk at that point of time, right? It said it's very, very undervalued, right? Eventually, 1 year later, the company was privatized. So within 1 year, the share price jumped like 77%, right? So you literally in 1 year, you make 147.17. Okay, but this one is luck because somebody kind of offer the company a buy. Okay, but even if don't have, right, we expect them to recover one. Okay, same for Visa. We shared during the 11 May 2022. Right. Since then until now, your annualized return is 16.4%. Decent. right? Holding for 3.5 years, 16.4%. Okay, very good. Okay, so these are all the life opportunity that we share to the alpha member at that point of time back in 2022. Okay, so right now let us go through the mama valuation. Okay, so if you were to look at Apple right now, is if to quick recap, you don't want to buy here. So Apple right now, same as Costco. You buy Apple right now, your next 10 years, you don't really will do well on. Right? The probability of you making money or making a lot of returns is very low moving forward. So that's why I can understand why Warren Buffett actually, the Berkshire Hathaway start to trim Apple position. Okay. So if you look in terms of the valuation, right, is negative margin. In terms of PEG, it's also very high. So I don't advise you to look at Apple. Okay. Then right now, Meta is around slightly above fair value. Okay. If you look in terms of the valuation, it's about fair value right now. Okay. It seems cheap, but like I said before, Meta, right, the business are a lot of moving parts one. And a lot of the business don't seem to can last forever one. For instance, people, they used to dominate Facebook, but not a lot of people use Facebook. So I can tell you in the future, people also may not go into Instagram or go in using WhatsApp one. So their business are very easily being disrupted. That's what I feel. Okay, so for Meta, I prefer to have at least 30% margin safety. So this one too low already. Don't look at Meta. You should not buy Meta at fair value. Okay, remember during Alpha Quadrant, I teach you how to link the business with the valuation to tell a story. Remember, the business will link. Okay, a lot of people know how to teach you valuation, but nobody know how to teach you how to link business with valuation. That's the most important part, right? During the Alpha Quadrant live webinar, I teach you that. How many of you remember? If you remember, type me in the chat. Okay. Then Microsoft. So Microsoft is over here at around fair value. Okay. So if you look in terms of valuation, negative 5.8, 5.48, I think it's okay for Microsoft. Slightly premium in terms of PEG, but the business, the moving part very little, right? A lot of the things they dominate one, like AI, cloud. They are second biggest. Their Microsoft Office is number one. Their Microsoft OS is also number one, right? So a lot of things that they actually dominate, and now they also invest in OpenAI. So I think Microsoft fair value can purchase on plus minus 10% is fair value. So I think right now decent, but you don't need to, because it's still on a, even though it's fair value, right? But you can nibble, right? So remember our 3 tranche strategy, right? You take the first tranche, cut into half. That's my take on Microsoft, right? The past 2 times that we bought into Microsoft is all fair value one. We never buy it when it was the SDC because this company very seldom drop to 1 SD. Most of the time it's trade at fair value. Okay, how many of you like Microsoft? You type in the chat. Okay, then Amazon right now, Amazon is the one that is very good value. Despite you see, we 2022 we share until now, even though the valuation is at the low side, yet the share price have gone up because the company have gone up. All right, so in terms of margin safety is positive, right? In terms of PEG is below 1 time, right? If you think about it, do you think Amazon, there's a possibility that they can maintain 20% growth? So PEG price to cash flow 1 time. I think yes, why I tell you. First, e-commerce is only about 15 or maybe 20% of the total retail sales. I think now the next 10 years, e-commerce can go up to 40-50% of the total retail sales. On top of that, they have cloud. Their cloud is number one, and cloud moving forward is going very good. So they got twin engine that will help them. So I think Microsoft is cheap right now. Right, despite the market, right, I feel Microsoft is cheap. Right, then let's look at Alphabet. Alphabet, wow, it's very a roller coaster, right, man? Early this year, it drops less than 1 SD. Then now it goes back up to, drop to negative 1 SD. Now it go back up to positive 1 SD already. Okay, so Alphabet right now is not cheap. You should avoid Alphabet. Right, avoid. It's not cheap now for Alphabet, I feel, in terms of the valuation. Okay, so now let's look at NVIDIA. Right, some of you requested, so I decided to do NVIDIA. So NVIDIA right now is around fair value. Right, you see they trade around because their earnings actually grow significantly to help to push it down. Right, so in terms of margin is about 8.58%, but in terms of PEG is quite low. Okay, but my take is right. If you really want to invest in Nvidia, just keep it a small stake right now, because now your risk reward is not there, right? And you don't know how long. The only good thing about Nvidia and Cisco at the point of time is the time when Cisco was the valuation very high, the earnings don't grow as fast as Nvidia. So Nvidia, the PE will drop, but Cisco the PE is very high, 200 times, but the growth is only like 15%, 20%, but the PE 200%, 200 times, right? So, but right now, if you still want to bet on Nvidia, I think just keep it a small percentage. Don't be too aggressive on Nvidia. Okay. Same for Palantir. Some of you like to invest in Palantir or that. Just keep it a small percentage. Okay. Okay, so let me do a quick summary of what I shared today. So a quick recap. Okay, so I shared with you the current market valuation and where's the opportunity and how I look at different markets. What do I think? And I also teach you to always focus on the downside instead of upside, right? You saw my case study in the Pico Far East and my case study in HKBN. I always talk about downside. I never talk about upside one. Right? I always focus on the downside. Then finally, I teach you how to invest in quality companies, right? And how do you look for quality companies that is interest and recession proof, right? Recurring, right? Look at the past crises, how they perform, right? They are they asset light, right? Their debt position and the cash position, right? And also don't overpay for them. Okay, invest in companies with the right valuation. Okay. So now I think we have gone through the training for more than an hour already. I think you guys now get the core concept of how how to look at quality companies that can give you multiple returns with minimum upside. Okay, I hope you guys learn something from this session. Did you guys learn something for this session? How many feels that you learned something for the past 1 hour plus? Yes. Okay. Okay, so remember to go do your work and go out and look for your next distressed asset, special situation catalyst, or quality company to look at. Okay, and also I would like to also take this opportunity to share with you guys. I think you guys know we have this service called Alpha Lab that can help you to build your watch list, right? If you are interested in looking at situations and all this, we do have it in our Alpha Lab. Okay, and this is the last opening for this year. If not, you have to wait until next year. If next year the market crash, you may have missed the opening. So we decided to do opening for right now. This is the last opening for the year. So can I have a permission to share with you Alpha Lab right now? If you're okay, can you type yes in the chat and let me know? Okay, thank you. I think most of you know basically we are an investment company lah. So we do this for a living actually. So all the research you have seen here or seen in Alpha Quadrant, everything is all done by Rusmin, Adam, and me, and we have 3 other analysts, right? So basically, right, you guys are hiring 6 of us to do research for you. Okay, we are 6-man team. We are not 1-man show or what. Okay, and I can tell you, you basically are paying us to do pattern recognition. Okay, because we have very very thick encyclopedia treasure trove of companies that we have gone through, right? So we can recognize pattern very, very fast. Do you agree with me or not? Okay. Do you agree with me that we can spot companies better and faster than you? Yes or no? If yes, can you type yes in the chat and let me know? Okay. So that is basically why we do Alpha Lab. So in Alpha Lab, usually we try to keep the mandate to a lot of companies, a lot of countries, so that we can really, have a big pool of companies look at, right? So far we have covered we have looked into US, Singapore, Thailand, Malaysia, Hong Kong, Japan, Australia, and we also recently looked into the Europe markets and all this, right? And Canada markets. So actually the number of stocks that we're looking consistently is not 18,000, it's actually 20 over 1,000. So we will comb through all this market, right, to find the best growth companies for you, right? Growth companies, as in like I said earlier on, those asset-like companies, those recurring companies with tailwind industry, right? Or companies that are distressed, that we think that the risk-reward ratio makes sense. Or companies that have situation that have catalysts, right? So these are those companies that we look at and we share it to you, okay? But of course, I also have to be honest with you lah. All right, this service is not for everyone. Okay, I can try to package this and sell the service to you, but at the end of the day, if you don't find any value, right, it does not serve the purpose. Okay, if you know us for a long time, right, this is not our style one. Okay, usually we tell you that it's up to you only. Okay, but if this Alpha Lab is something that can help you boost your return and to truly be useful for you, right, we are there to serve you with our best ability. Does it make sense to you? No? If it makes sense, can you type yes in the chat and let me know? Okay. So before you even consider this Alpha Lab service, right, you need to fulfill this criteria. Okay. You must understand all the financial basics and fundamental. Like I always say, you must agree with the Alpha Quadrant method. Okay. No point you join us, but you don't agree with the method that I taught you. You need to agree with the method that I taught you on. Okay. Because you are using the exact same method to find the companies. Okay. And if you are someone who are new to investing, you should not join Alpha Lab. Okay. Because you need to get your basic right first. You go familiarize yourself with the Alpha Quadrant process, and once you build out your basic foundation, then you come back to us. Okay, because there's no time to teach you in Alpha Lab one. Okay, Alpha Lab is all about just buying already, taking action already. Okay, so you also must be ready to invest overseas, because a lot of time the Alpha Lab companies are in Canada, in Europe, in US, Hong Kong. Okay, only some is in Singapore only. Okay, and you have to be a long-term investor. Sometimes we buy, right, the company is distressed for this amount of time, but it takes some time for it to recover. So you need to think long-term, and you have to be you have to have investable fund right now. Okay, you must have at least $10,000 right now to invest. Okay, and also you have to be responsible for your own financial investment decision. Okay, why I'm saying that is because a lot of time we share the idea with you. It's up to you whether you want to buy or not. Okay, I think you all know already the service called Alpha Lab, and I always consistently telling you that you have to build your investment watch list, right? Because most people, I can say, they don't have watch list one. So when the opportunity arises, they start analyzing the company, and by the time they analyze finish, the share price go up already. Okay, and because now a lot of things are on the internet, on the social media, news are spreading very fast, right? Do you notice the past 10 years, the crisis all recover very fast? Do you notice it or not? That the past 10 years, the crisis all recover very, very fast. Do you notice? If you notice, can you type yes in the chat and let me know? Do you notice it or not? And because the crisis very fast, right, you got no time to analyze one. You need to faster take action. You look at this year, the Trump, the one straight away within 1 month, it went up already. So if you watch this, you know which stock to target. So when the crisis happen, you straight away buy already. Okay, let me show you an example. So we always have bookings .com inside our watch list, but we didn't buy. It passed the business management financial, but not the valuation. Okay, but what happened? This asset company was hit during the COVID pandemic lockdown. During COVID pandemic lockdown, nobody travel, lockdown, no travel, no hotel booking, all dry up. Right. So the business actually went into some financial issue, and they raised some funds from the public to tide through the financial issues. Right. And if you study the history of, let's say, Spanish flu, right? That was one of the worst. Now the flu that we're getting is actually the Spanish flu back in the olden days. So the Spanish flu actually lasts 2-3 years on. So if you think in same scenario, the thing should last 2-3 years, right? So if you have bought booking at that point of time, your return easily 300% since then until now. Okay, we did bought booking at that point of time at the right valuation, right? And we hold until now. Our CAGR is about 26.5% from 2020 up to now, right? 5.7 years holding 26.5% returns per annum for booking.com. So you see, these are what I call distressed asset that you need to look at, all right, and have the confidence to buy. Okay, I can tell you at that point of time, everybody no booking is distressed. But how many of you at that point of time got the confidence to buy like us like that? Okay, we have the confidence to buy booking because we do investing day in, day out, and we have confidence where we think that this distressed asset will eventually come back up. And we have seen scenarios like this before, right? So we roughly, based on our past experience, our encyclopedia book, right? And we calculate the probability risk reward. Do you agree with me or not? Yes or no? Okay. So let me be very honest here. If I did not tell you, example, Amazon, if I never tell you Amazon is cheap, you yourself know that Amazon is cheap, right? Do you dare to buy or not? I can tell you, Some people there, some people won't. So in Alpha Lab, right, we give you the confidence because we tell you that you can look at this company because we ourselves we bought it. So when we bought it, do you have the confidence to buy into that stock? Yes or no? We eat our own cooking, we eat our own money. Because if you don't do well, if we buy the stock, we tell you don't do well, that means we also don't do well, So we put our own money to test, Do you agree with me or not? Yes? Okay? If yes, can you type yes in the chat? Okay, so Alpha Lab, every month you will get one new case study or one company that we refresh, right? That runs through the business, management, financial, and also what's the current valuation of the company. Okay, so what is in this Alpha Lab watch this is you have usually your big companies, but most of them are not your typical blue chip companies that you well known. They are small and mid-cap companies that still have very long runway to run. Okay, like Secure, like NC, Sypnosis, like ICE, like FedSet, all right, a lot of other companies that people don't know one, like Jack Henry, what else? Lifeco and all this, right? All these companies that most people don't know. It's a small and mid cap OTC market group. A lot of people also don't know this company, right? So they are usually small and mid cap companies that still have long runway. Okay, so right now in the Alpha Lab, we have about 70 over companies, right now. And basically we comb through all these different markets, right, to come out with all these 70 over companies. And so all these companies are usually your value growth and growth stock that have potential to give you capital gain over a long run. Okay, so these are, to summarize everything, right, is basically you are leveraging on our time, right, to do research for you. That's all. Very as simple as that. Okay, so let me show you how Alpha Labs looks like. Okay, so inside this, how Alpha looks like. You have your research, then we have these different portfolios over here: US, Asia, Europe, and satellite. Satellite is where all the special situation and distress are there, or other things that cannot fit, we'll throw into satellites, right? Then the intrinsic value table, forum, and the meetup, right? You can submit ideas to us also. Okay, so our recent case study is actually FedSets, right? Which done by one of our analysts, Darren. So if I were to click on it, you can see it runs through the business model, the financial highlights, economic mode, growth driver, business risk management, and financial evaluation. Okay, so the business model will explain to you in depth how do you assess the valuation. How do you assess the business model of the company? Is it recurring, non-recurring? What is it like? How strong it is? Then we talk about the different modes and what's the current valuation right now of the company, right? So you can see from here. Okay, so I did another company called Brown & Brown. It's also the same thing also. This is an insurance company, very good insurance company. Recently, the share price dropping. I'm still tracking on this company. I'm waiting for a right price to buy into this company also. But it's not yet the right price, so I'm just still waiting on it. Okay, but recently the valuation came down, right? Because the insurance is going through a softening period, which is very good. That's opportunity. I smell opportunity in that. Okay, so I'm looking very closely in this Brown & Brown company, but we have not taken a stake yet. Okay, so you got your business model, same thing, everything. We cover all the different companies. Then you can go to our forum site, where we do updates out there. Those companies that's in the portfolio out there on a quarterly basis. Those that is not, usually update them either half yearly or once a year only. Okay, so for instance, let's say if you are those people who don't like to track stock, right? We have our analyst or I will track, like for instance, Leo, he actually tracks the C Limited, right? Which we also have stake inside C Limited under the satellite portfolio, right? So you update what's the thing. Or Adam, he tracks the Alphabet, latest Alphabet result over here. You can see. So if you are someone that is someone who don't like to track, right, then we track it for you, right? Like Adam will say, Alphabet has surpassed +1 standard deviation. So yes, in Alpha Quadrant lesson, we will show step by step of post evaluation and all this. Okay, so that is basically how Alpha Labs looks like from the inside. Just now you saw the intrinsic value table. We will show you the different intrinsic value of different companies, and you will have an indication of what company is undervalued right now and what's the margin of safety. And on top of that, right, we have this Alpha live webinar or live meetup. Okay, so we are having a live meetup next week, next Friday on the 21st November. That means you meet us face to face, right? Paya Lebar area. Okay, so that is on the 21st of November. All right, we do provide refreshment down there. So if you come, you also have. We usually, my guarantee to you is twice a year. either a webinar or a meetup is definitely will have one actual face-to-face meetup, then another one is webinar. Okay, but in the event where there's crisis, right, we will definitely do more webinar. Okay, but my promise to you is 2 lah. All right, so far this year we already do about, I think, 6 already, 4 or 6. I can't remember what's the amount. All right, but it's more than 2 already, definitely. Right, we'll discuss opportunity, all this. So this coming one, I'm going to discuss the opportunity, right, what we can look at, and also I'm going to talk about I'm going to tell the members to consider taking stake in this situation with Catalyst, which is going to happen already. So I'm telling them, don't wait for the financial. Before that, I told them to wait for the financial result to come out, but I tell them, say, don't wait for the financial result to come out. Okay, because there's some change to the business, which I feel the Catalyst likely will happen already. Okay, so don't worry if you cannot come for the meetup, because it's all recorded. All the past meetup is all recorded inside. You can go and see it down there. Okay, so on top of that, you are also able to access the alpha portfolio, which is it's a $2 million portfolio. It's our own money, right? It's a $2 million portfolio that we have grown to, right? So basically, all these companies in the alpha portfolios are looking for the main core position, right, should be scalable business model, stable recurring, wide economic mode, long runway, minimum risk, good management, good financial performance, and we want to buy it fair or undervalued. Okay, right? We are very careful with that because this is our own money. Okay, you will know exactly what we are buying. Every time when you buy or sell, we will send out an email to you. Okay, if there's no opportunity, right, we will just sit there and wait and build our cash. Okay, but I can tell you opportunity always there one. Okay, because 70% is core portfolio, 30% is all the distressed asset and situation with Catalyst. Okay, so right now, like just now you can see, we got a few portfolio: US, Asia, Europe, and also satellite. Right, the US stock we have about 12, Asia about 6, satellite I think it's about 6, with 2 distress and 2 special situation at this moment. I think 2 distress, 2 special. Yeah, definitely got 1 distress and 1 special situation with Catalyst. Europe about 2. Okay. Okay, so see, Alphabet is also one of the companies that we covered many years ago. We invested all the way to now. Back in the 2018 tech crash, we bought about 151. We top up at 2020 or so. Our gain so far is 465%, right? From 2018, we ride through all the way ups and down of Alphabet. Okay, so basically the whole Alpha Lab, you already get all those 70 companies inside that. All the research is done already. Then every month you get new case study. On top of that, sometimes we will refresh the case study as requested by the member, right? So that's the monthly research. Then on top of that, you got the Alpha Meetup twice a year, either webinar or face-to-face meetup. Then you also get to assess what 5th is buying. Every time we buy and sell, we'll send you an email, all that. Okay, total value is about 8,479. Of course, I'm not going to sell you this amount, right? This is the total value you can get. Okay, Alpha Lab is a 2-year subscription at 2,497. Okay, but I need to repeat, this is not for everyone. Like I said earlier, if you are someone who is new to investing, this is not for you. Okay, but you have been investing for some time and you want to save time, save effort to find great companies, then this is going to help you, because you are just leveraging on our time and you are leveraging on our pattern recognition. And we, of course, when you invest, we give you the confidence to invest. Okay, we don't want to promise you anything, but because Alpha is created to really help you to build, identify great companies and build a watch list, and identify distressed asset, identify situation with Catalyst. Okay, so like I said, everything have ROI one, return on investment. So Alpha Lab is all about gains, right? So that's why I say you must have $10,000 to invest. So back in 2017, right, where we cover MasterCard, right, was $105. If you have whole MasterCard from there until now, you don't sell, let's say, your $10,000, your gain is about 400%. So that means your $10,000, your gain is $43,000. Easily covered the Alpha Lab one. You look at MasterCard, simple business, asset light, long runway, tailwind industry, pay at right valuation only. All right. We cover iFast also back in 2017 at 79 cents. So if you hold iFast until now, right, you up about now it's about $9.15. Now we cover about 79 cents. We bought ourselves, right? Some of the members hold to date, but we didn't. We when we go up 100%, we sold, but we went to buy Interactive Broker. Our Interactive Broker also went up 5 times. Okay, so iFast also, if you invested 10,000, your gain easily 100 over 1,000, easily covered the whole Alpha Lab thing. Okay, Trade Desk also we covered some. Trade Desk is another company that not a lot of people know. It's a company that is Alphabet and Meta dominates among the small player. Trade Desk actually dominates, right? So we covered about $19.77. Now it's about $43. I think I can't remember what's the round. basically your gain is about 12,000. Recently, the share price has fallen significantly because they show a bit slower growth, so they drop, right? But overall, still make gain. Okay, so if you see Alphabet that I shared with you just now, right? We hold from December 2018 until now November 2025. Our gain is 465%. So if you calculate the CAGR in terms of the years, about 6.9 years, right? It's 28.7% per annum annualized return. Okay, so the thing is not just about gain, but how can you earn those gains with minimum risk? Okay, by buying into great businesses. Okay, so on top of that, today we also have a special bonus for you, which is the Alpha AI. Okay, so now a lot of people are talking about AI, right? And AI is one of the fastest growing industry, right? You got your NVIDIA, ChatGPT, Microsoft, but how do you make money from AI? Right, so we have this special training that we conduct once a year. Okay, so recent one just ended only, right? So the next year one you can join. Okay, so as a Alpha Lab member, right, you will get this Alpha AI for free. Okay, people paid for Alpha AI, but you will get this Alpha AI for free, lifetime. Right, every time we conduct Alpha AI, you can get it for free. Okay, the next training will likely be next year September. We just finished it in recent September. We only conduct it once a year. So this is complimentary access to you training for life. So every time when we do updates on all these Alpha AI companies, you will get it for free as Alpha Lab members. Okay. Okay. So let me do a quick recap. So basically you have the 70 over companies that is here. Zhong Ming said, if you already have Alpha AI subscription, can we get? Okay, those who have already have Alpha AI subscription, right? You can email to contact@fifthperson.com. We have a price for those who we have a discounted price for those Alpha AI members. Okay, so your full suite, all right, about 70 over companies. Your monthly research, right? Every month, one new company or refresh. Alpha meetup twice a year. In the event where crisis, right, we also will handheld you throughout one. Okay, you can access to the portfolio. On top of that, this year we got the Alpha AI bonus also that you can get for free. Every year we conduct the Alpha AI. People pay, you'll get it for free. Okay, so Alpha, you got right today until this coming Sunday to think whether you want to join us in Alpha Lab 1 hour time. Okay, so Alpha Lab is a 2-year subscription for 1997. Okay, so you got now until this coming Sunday to think about it. Okay, so if you want to join Alpha Lab, you can go to alphaquadrant.com/alpha. Okay, so if you have signed up for Alpha Lab, do type in the chat and let me know. Okay, so if not, I want to answer some question right now. If you have any question, can you just type in the chat and let me know? Okay, Brownlee says, so after 2 years, how much do you pay? After 2 years, about less than 1,000 for the 2-year subscription. Okay, Alpha Lab is our research service. Can we watch the recorded Alpha AI lesson? Can. I think you can email in, then they will give you the access already. So as an Alpha Lab member, you have access to Alpha AI already. Alpha AI is basically is a course that we teach that talks all about the AI one. Okay, but you're going to get it for free. Okay, any question? Let me see. Darren say, what's your thought on ADP? Automated data processing. This company I have not analyzed them yet, so I have no views on it. Pfizer, I have not looked at this company yet, so I can't comment on Pfizer. Okay, Mohit, UOB seems to be trading at low price. Good time to buy. Low price or low valuation. Do you look at the valuation? What's the price to book for UOB? Okay, UOB is not it's a dividend stock. It's not a alpha stock, Alpha Quadrant type stock. Yeah, for those Alpha AI member, you can just email to contact@fifthperson.com. What's your thoughts on Palantir? I think, honestly, I don't like to chase trend on. Okay, if you really want to buy into such company, just make sure you keep it in a small percentage. Shaming us about Copart. I think Copart, Soon Tian said next Friday session is also on the web stream. No, next Friday session is a live meetup. Okay, but if you can't attend, don't worry, we record the whole session. Copart. Copart, I think I got concerned because of electric cars. Because EV don't have a lot of parts. Yeah. Okay. Esther said thoughts on Adobe. I think Adobe, mm, I think the sentiment is overblown for Adobe. Right. But you never know. Right. But based on the original business, they are still making money. Right. But how it goes, you cannot predict on. But based on current valuation, it seems quite reasonable valuation. Okay. Yeah. You guys very funny. You all ask me what's the valuation of all this company. I need to go and look at the chart on. And now I look, how do I know? I don't remember everything of all this. Darren say your thoughts on Salesforce. I think Salesforce is a very strong company. You just need to buy at a good valuation. I don't know what's the current valuation of Salesforce. Okay. What's your thoughts on C? Okay. Okay, let me see. For those who are Alpha AM members, you can email to let me type contact@fifthperson.com. Okay, for those Alpha member, you can email to contact@fifthperson.com. Okay, for those who are ready to join Alpha Lab, you can go to alphaquadrant.com/alpha. Okay, United Health, that's one company I'm looking at before Buffett announced the before Buffett actually announced the acquisition, right? I did talk about this company in the in the valuation premium training, right? And I also calculate the risk reward. I think at this price, I mean the risk reward is you have to see situations, and not everyone can work one, right? Usually it's very distressed and all this. I think in terms of value is still down there, right? I think the new CEO may which is the one that the OCO came back and run, and the OCO have a very good track record. I think likely it's more positive than negative for United Health. Okay. Okay, let me answer about maybe one or two questions. Okay. Then I will call it a day. It's almost 2 hours already. Okay. Yeah. So for those who are ready to join Alpha Lab, you can go to alphaquadrant.com/alpha. If not, you got now all the way until this coming Sunday to sign up. Okay. Gui say any thoughts on IX Biopharma? I don't look at the company, so I'm not sure about that. Hims and hers also never really follow so I don't have insight on that. Yeah. Let me see what else. TKR, so after Alpha Lab, the Alpha Quadrant will be merged with the Alpha Lab. No, Alpha Lab is another lock-in one. Thomas said, is the webinar recorded? Yeah, it's right. Most of the time we'll send you the replay lah. Okay. Okay. I think if not, I think we should call it a day. Now it's about 9:55 already. Okay, so thank you so much. I hope, how many of you, if you do learn something at this point, do type yes in the chat and let me know. Okay, thank you so much for attending the webinar up to this point. All right. For those who's interested in joining Alpha Lab, do remember to go to alphaquadrant.com/alpha. This is the last slot for the year already. Then if not, you have to wait until next year. All right. Hopefully the market don't crash. Okay. If not, thank you so much, and I'll see you. Bye bye.